All right, so we're looking back on the week. Data this week continued to show a firming economy. At least retail sales released by Stats SA were the best performance. They rose ahead of the anticipated increase in value-added tax. That came into effect in April. We were looking at the data from March. National Treasury also placed more than 25 billion rand worth of new bonds on the international capital market. It has been hailed as a sign of the international market's confidence in South Africa. The activity there at the auction, but dampener on the positive outlook is the price of Brent crude oil that we import for fuel that briefly breached $80 per barrel this week. Analysts warn that consumers can expect petrol prices to rise by over 70 cents next month.
The increase in retail sales was above market expectations of 4.4%. The sales increased by 4.8% year-on-year in March from a revised 4.2% increase in February. Economists say it's a sign that consumer confidence is improving, but they also warn that 2018 will be a tough year overall for retailers because of a pedestrian economic growth, a reduction in consumers' disposable income, and the high unemployment rate. The escalating Brent crude oil price is also a threat to consumers. South Africans can expect petrol prices to rise by over 70 cents next month. This will mean a third successive fuel hike for struggling consumers. South Africa is a net importer of crude oil, and with the combination of higher prices and a weaker rand, this will likely prove highly inflationary. Meanwhile, the National Treasury has announced that it has successfully placed 25.1 billion rands worth of 12 to 20-year notes in the international capital markets. It has hailed it as a sign of the international market's confidence in South Africa's economic policy framework. Treasury says the markets had a healthy appetite for the new bonds as the transaction was more than 1.7 times oversubscribed. Next week, the Reserve Bank is expected to keep interest rates unchanged as an anticipated quicker rise in consumer prices over the coming months won't drive inflation above the target. Economists surveyed in the past week predicted the central bank will hold rates at 6.5%. Inflation figures will also be released next week. Diabosito, SABC News, Johannesburg.